Welcome back to another edition of the Indy Investor Speakeasy, where we like to share a couple bourbons. A lot of times we'll be in person, maybe in Nick's basement. He's got a ton of bourbon there that we will probably be sampling here in the near future. But today we just kind of wanted to go over what we're seeing in the market, what we're hearing other investors saying, what they've been telling us, what their strategies are, what our strategies are. Little bit of that. Some of my background is I personally own about 35 rental properties personally, and Randy and I are actually business partners, and we do a little bit of wholesaling as well. And as far
Yeah,
as Nick goes, you can tell him a little bit
yeah,
about your background.
absolutely. Well, first of all, don't undersell yourself. You guys are like the hottest, youngest wholesaler here in Indianapolis. It's definitely exciting to watch that happen. But yeah, I'm a real estate investor myself. Own quite a few rental properties. Own a couple of wedding venues. Primarily, am a flipper in addition to running a contracting company.
Yeah,
Yeah.
and I'm Randy Placencia. So I've basically my background's wholesaler, investor, real estate agent. So I've been in the real estate business for 10 and a half years now. So yeah, I've seen a lot of action.
Yeah, absolutely. Well, we all decided to sit down and talk a little bit today about what we're seeing in the market and kind of some advice that we've got for people out there who are looking to invest. I'll just speak for myself. When looking back at the last several years, going back to 2019, 2020, inventory was super light. And then we hit COVID, where interest rates were dropped, they were slashed, everything was super cheap. And Randy, you were obviously an agent at the time. I'm sure you saw things just kind of flying off the shelves. Are you willing to talk a little bit about that time really quickly and what you were seeing
Yeah,
as an agent then?
yeah, it was really weird. Like as an agent perspective, it was like something that you could never imagine seeing happen. Because properties just could not properties wouldn't last an hour on the market. Homes were selling before they were listed. Like it's just like stuff that you would see kind of like on the off market sales stuff with, transactions moving fast, people waiving inspections, like just like no contingencies whatsoever was happening on the retail market where people are buying even like $400,000 homes, $500,000 homes, no inspections. It was a wild time. And there's good stuff and bad stuff with that. Home sellers obviously got whatever they wanted for their home, but on the flip side, it was just so hard to find a home to buy because there was just way too much competition. So
Yeah,
interesting
absolutely.
times.
Yeah. Great time to be an agent if you were good at getting listings, it sounds like. But
Yeah, yeah. If you
definitely
were
tough
just a,
time.
if you're just a buyer's agent, I
Yeah.
think you're pulling your hair out.
Yeah.
Yeah.
Buyers agents definitely struggled in that time. And during that time, I was talking to so many people who were getting started in real estate investing. And at that time, my kind of advice was hold steady, put your offers in, but do the right things. Get your inspections. Like you
Yeah,
can't afford not to get inspections when you're doing this from an investor standpoint. And I think a lot of people got discouraged during that time. They just started, putting their
100%.
hands up and just like, you know what, I'll buy when there's a crash.
Yeah,
While I wouldn't say we're necessarily in a crash today, what we are seeing is that there's a little bit of stagnation. So many people went out there. They got loans on properties in the threes, fours, 5% points, and they're less inclined to be willing to take a price that's lower than what they want because the cost of capital is so cheap. With interest rates currently sitting in the sevens for the most part, I think a lot of people are not willing to necessarily come off their numbers. So there are a lot of homes on the market, but we're not necessarily seeing huge reductions in price. And I attribute that to the fact that there's so much good, quote unquote, good debt out there. Is that generally what you guys are seeing?
Yeah, for sure. I mean, even with the interest rates being what they are, I always tell people, I'm like, hey, it's just another math equation, right? We just keep baking the numbers into our offer when we make the offer. Doesn't mean we're just gonna sit. That's just another piece of the puzzle when we do our math equation.
Yeah. Randy, is that
yeah.
is that
It
generally
just
what you're saying?
Yeah, it's just more upfront due diligence on any purchase of running the numbers, pretty tight just to make sure that things work out for their specific scenario, where before you didn't really have to factor that in. So that's all it is. I mean, yeah, it makes things a little tough to buy a property with the payments that you want and as an investment perspective to make it cash flow. However, if you got to look at the big picture, it's not like your rate's going to stay there, right? You have the option to refinance. So we've already seen, a few drops in the past couple months. So yeah, it just makes it a little harder on the front end, little more legwork.
Absolutely. And yeah, I mean, anecdotally right now, as a flipper, as somebody who does that as kind of their way they put food on the table, I'm definitely seeing that things are sitting on the market longer right now. People are willing to negotiate. They're willing to put in offers well below asking price now, where before that wasn't something that was the case. We've got a property in Noblesville that we were hoping to get 300. Now we had an ARV about 285. We ended up getting it done for 285. Got another property that I think is the nicest property we've ever flipped over in Bates Hendricks, and that area is just sitting, nothing selling there from an after repair perspective, nothing that's been fixed up. So we've definitely seen kind of a stagnation in the market right now. We're not really necessarily willing to come off our number, but buyers aren't willing to necessarily meet us where our number is. So with that in mind, guys, I think we've all seen the news here over the last couple of days. The Fed is talking about potentially dropping interest rates in 2024, and potentially reinvigorating the market to try to do that soft landing. Kind of what's your guys' take? What do you think is going to happen when they end up starting to drop rates?
Yeah, I think it's going to start, right off the bat in 2024. I think Q1 as for the retail market goes, I think will be probably a pretty big quarter compared to other previous quarter ones, just because people have been sitting on waiting with these rates for pretty much a year, and they just haven't moved. And as soon as I think like the sweet spot is like as soon as someone can start getting rates at low sixes to high fives, like it's just going to go nuts again, where people are just going to come out. And I could probably see that happening like end of Q1, going to Q2. So with it already dropping a few times, I've personally already had some people just reach out and just let me know that they're looking to buy again. And it's December, right? And like we just never hear that. So I think there's a lot of just pent up demand and to buy a house for other people that I think it's gonna be pretty active. So if things are sitting right now, I would probably just cross my fingers, hold off, and just wait, because I think there's going to be more buyers coming in Q1.
Yeah. So if you're saying that from a seller's perspective, hold off.
Correct. Yeah, you're
Yeah.
mentioning, there's properties that are nice, right? They're just sitting on the market. I think just another tick and another interest rate drop can just bring out that buyer that you need.
Yeah.
Yeah,
It'll sell.
patience might help you out a little bit. I got two of them sitting there as well, so I'm in the same boat as you. So we're just sitting there waiting, and we're not really willing to budge on it either.
Yeah.
At this point, because I mean, same as you, I feel like we're priced pretty good.
Yeah.
So once those interest rates start lowering and the payments start looking a little better, like what Randy said, I think we're going to get a lot more investors and just buyers in general into the market. Especially since they saw where they were at and now they're coming back down a little bit. I feel like they might get a little bit of FOMO again too. They're like, oh, I don't want it to go back up again.
Yeah.
And on the flip side of that, some of these arms that were coming due and some of these commercial guys that were a little afraid because maybe their stuff isn't cash flowing now and they were trying to figure out what they were going to do or sell or whatever. It might be time for them to start refinancing now once they feel like they've hit a happy medium there, getting closer to that net zero cash flow so they can actually keep it viable or get it sold.
Yeah, absolutely. Well, one of the things that I was noticing, and I kind of alluded to it earlier, is that so many people back in 2020, 2021, they were saying, hey, I'm going to wait for the dip in the market. Many of these same people I've been, talking to here in 2023 saying, all right, like, are you gonna buy? And they're like, well, nothing cash flows now that now that interest rates have increased. And so it's that tough balance where when things are really good from a cash flow perspective, the market's probably in a hot space and you might have to pay more from a dollars perspective. When the interest rates are a little bit higher, it's a calmer market. Yeah, the cash flow doesn't look as good. So, kind of looking forward, definitely want to get your guys' opinions on what you recommend for investors kind of leading up to some of these interest rate drops that we're looking at here in 2024. what I'll tell you guys is I think now is a fantastic time to be buying. Right now, there's inventory building up in the market. I'll speak specifically about Indianapolis. We're seeing inventory build up to pre-pandemic levels. So it's still getting, we haven't gotten into by any means a buyer's market where you can ask for anything you want, but that inventory is rising to those pre-pandemic levels. So now is a really good time to get in there and negotiate. Like I was talking about with some of these people who are coming in and buying my flips, they're willing to come in there and offer below asking. I think now is a great opportunity to go set your price on a lot of these properties. Go
Yeah.
out there, find a property that makes sense today. Don't ever get into a position where you have to refinance in the future in order for it to ever possibly make sense. But if you buy something today that just barely makes sense, doesn't need to be a slam dunk home run, you can always refinance that sucker in the future. So, if you're at 7% today, for instance, and interest rates drop to the mid fives, that could drastically change your cash flow. Additionally, if you're in a DSCR position, most of the time DSCR loans, you have to hold, a 1 or a 1.2 DSCR, DSCR being calculated as the net operating income divided by the mortgage rate. So if you might not be able to lever up to 80% of that ARV in that scenario, you might only be able to get 75% today. But once interest rates drop, once that mortgage rate on a monthly basis drops, you could potentially go and strip even more money out of that property in the future when interest rates drop and your cash flow goes up, your cash in the deal goes down. So I think now is a fantastic time to buy, with the caveat that it needs to make sense today, at least a little bit. What are
Yeah.
you guys saying? What do you guys think makes sense?
Yeah.
And I mean, that was something I was telling people even when interest rates went skyrocketing. I think me and you talked about it right away. We're like, yeah, even if you can find something that's net zero, or just like you said, like a tiny bit positive, even if it's, I mean, you're still getting the debt pay down, you're still getting the equity on it. So that's still an advantage that you're getting. But once, like you said, once interest rates start to drop a little bit, even the littlest, your cash flow is gonna, I mean, you're just taking free cash flow at that point.
Yeah,
So
absolutely.
Yeah. And I think, Nick, I mean, you mentioned these people that have been sitting on the fence because of inventory or uh, just competition, and then now they're sitting on the fence because of rates. Like I agree. Like right now, like if you're still that person, like this is the time, because you won't have to worry about that competition right now that happened in 2020 and 2021. Um, and I think the key is just being aggressive with offers. Like, make as many offers as you can, because yeah, you're going to make offers below asking, and 90% of them are going to say no, and like you'll never have a chance to get it. But it's a numbers game as anything else in life. The more you do it, something was going to stick. And just I think just having a good team behind you, like a real estate agent that are just on board with just sending as many offers as possible on just properties that fit the criteria.
Yeah.
And one of those is going to stick, and then like you said, once rates drop, you're going to be in a good position to pull some money out.
Yeah, two things I want to say on that that I think are really, really interesting. First is if you guys need recommendations for agents, Randy can obviously help you out, but that's not his primary day-to-day is to be a
Right.
buyer's agent. So if anybody wants to reach out to a couple agents who we recommend, feel free to reach out to us. You can reach out to me at nick@offleashinvestments.com. I'm more than willing to give you a couple of referrals. No monetary incentive for me, just some agents who I think are really badass and do amazing work. The second thing that I'll say that I think we should touch on is make those aggressive offers. Make offers that make sense for you. Don't just like drop the price because, hey, you just want to drop the price, but
Right.
actually go in there with a plan, go in there with a strategy, and make offers based on that strategy. And if that works, go put that offer in. You're going to get rejected, like you said, on 90%, maybe 95, maybe 99% of those deals, but circle back a week later and see if that a property's still on the market and make that offer again. And then circle back another week later and then make that offer again. You've spent the time to go out there and analyze that property. So
Yeah.
you should, until that property sells, you should be following up on that
Yeah.
property until it
Mhm.
goes pending, until it sells. Because just because it goes pending doesn't mean that somebody's going to close on that deal. Somebody else might go do an inspection contingency, realize that the wiring's bad, which you already knew because you looked at it and could tell that
Yeah.
it was ungrounded before you ever did that. And so just follow through with that property until it finally changes hands. because you don't want to waste that effort. That time is valuable, and you want to make sure that you're getting the most chance on each property that you possibly can.
Yeah, man. I mean, plus like right now, I mean, you just never know what a seller's situation is, right? Because they're probably listening to their agent on what they should sell their home for, but like what would they really accept? What's acceptable to them? It could be way below what they're asking because there's an unforeseen motivation there that no one else knows about. So I've heard a lot of success stories of investors just offering 85% below asking, and they get it because the seller was super motivated. And
let's clarify, 85% of asking.
Right. Sorry. Correct.
Yeah.
I like your math better. I'd like to get a couple of those offers done, but yeah, I'm with you.
Yeah, 85% of asking. But so you just never know. I mean, that's basically the point there. So, you just got to take some swings and, try to see if you can hit one out of the park.
Yeah, absolutely.
Yeah, just get off the sidelines. I mean, you can't keep making excuses. It's either going to be a hot market, like you said, and you're going to be up against a bunch of competition. You're going to have to work a little harder, or now's when you're not going to have as much competition, and now you can actually be aggressive and explain why you're making these offers, and actually have some time to do some due diligence on these before getting stuck with like not doing a scope or something like that because you're rushing to get a deal done.
Yep. Realistically, now's the time when I would want to get started in real estate investing rather than 2020. I would much rather be getting started today, where I really have an opportunity to analyze my numbers. I get to be a little bit more deliberate. I always am able to get my inspection contingency, which I'm a huge advocate of. Now, granted, I'm the guy that works in construction here. I'm not the wholesaler, so I might have a different opinion than the two of you guys. But I'm a huge advocate, despite the fact that I know construction better than 99% of investors here in Indianapolis. I still get an inspection on every single one of my properties. I get a mainline inspection. Now is an opportunity where anything you get under contract, you should be able to get that done.
Yeah.
Yep.
Whereas the hot market was more for the experienced investor for sure.
Yeah.
Because they know, I mean, you know that maybe I should bake in another 10 grand because I see a tree in the front yard and good potential. This isn't 100-year-old house, that there's something going on. So
absolutely. Any closing thoughts here as we look to look ahead to 2024 and investment strategies earlier in the year?
No, I mean, I know Brooks and I are excited. So like we're just anticipating the rates to go down, but the market to get a little hotter. And that's just gonna cause more activity, which helps our business and helps the people that we work with. So no, I think it's something that we'll be keeping our eye on. The rates are gonna drop. It's just a matter of how much. And then if you're on the fence, like start tomorrow, start analyze some deals, ASAP, because you don't want to be caught up in another mess of multiple offers and all that stuff. So
yeah, absolutely. Well, thank you for joining us again on the Indy Speakeasy. We're definitely accessible here. You can reach out to me at nick@offleashinvestments.com if there's anything we can do to be helpful, either from construction or from a coaching perspective. We're here to help you guys get started. Randy and Brooks, where can they reach out to you guys?
Just Brooks at brbuyesindy.com. You can also reach us at brbuyesindy on Instagram, and mine's just my name at Instagram as well. You can reach out in a message there as well. So
yep. And Randy at brbuyesindy.com is where you can find me.
Thanks for joining us.